please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now back home yesterday, the Nifty regained above that 10,750 mark, rebounded from 10,700 key technical support levels as well. The Sensex itself rallied about 250 points. The Midcaps too rallied about 0.5%, and the Nifty Bank outperformed to end with gains of more than 1%. But is that the real thing or not? Well, for all the cues that are stacked up today, we have Sonia joining us. Sonia, good morning.
Hey, good morning, Mangalam. Actually, you asked the million-dollar question, is that the real thing? Because, you know, it is hard to sort of guess which way the markets are moving. Yesterday, we had a good day, but the 2 days preceding that, the markets were on the downside. All you can say is some technical markers have been conquered. So the 20 and the 50-day moving average have been conquered on the upside. And now we're getting new leadership in the form of names like Reliance. Of course, Reliance has been doing well for the past many weeks, but yesterday it hit a fresh high. There's a lot of talks of, you know, the speeding up of the 5G services rollout, some test services being done, etc. So all of that is giving momentum to the telecom business, and that's something that the street definitely likes. Apart from that, if you look at the numbers, domestic institutions have bought almost 1,500 crores in the cash markets yesterday. Of course, we continue to get selling from DIIs. The trade tensions have simmered across the globe, so that's a good thing for the bulls. Yesterday, we saw the Asian markets, or rather this morning, the Asian markets are marginally in the green. Yesterday, the Nasdaq closed at a record high, although the Dow is still down for the 7th straight day. Brent crude, keep an eye out on that. It is a bit volatile ahead of the OPEC meeting tomorrow. At the moment, Brent still trading above $74 a barrel. So for our own market, although we did have one good day yesterday, can't rule out a lot of volatility given the cues that are stacked up.
Okay, and Sonia, stocks?
Well, as I said, you know, Reliance will continue to be in focus because of the market leadership it has assumed. Apart from that, SBI will also be in focus this morning. We did have a conversation with the SBI chairman where he indicated that FY19 will be a better year for the banking industry and efforts are being made to reduce corporate stress, etc. Interglobe Aviation, yesterday the stock was down quite a bit. The company has said that they have not received any summons from the Enforcement Directorate, so they've sort of quashed those rumors. IDBI Bank could be in focus. The government has given the SBI MD B. Sriram additional charge of IDBI Bank for the next 3 months. And JK Cement is in focus. There's a board meeting on the 28th of June to consider fundraising. So these are just a couple of stocks in focus this morning.
All right, Sonia, thanks a lot for that. With that, it's time now for another short break. Come back. We'll get you a snippet of the chat Shireen Bhan had with...
Welcome back. Well, on to a CNBC TV18 exclusive. Rajneesh Kumar, who's the chairman of India's largest lender, State Bank of India, has advocated the need for a strong asset management company to tackle the menace of bad loans plaguing public sector banks at the moment. Speaking to Shireen Bhan, he said that there was a unanimous view against bankers that 21 public sector banks in India may be way too many, and some consolidation perhaps was also the need of the hour.
There are various models available where it is being felt that we definitely need a strong AMC. The country lacks one. There are funds who have their own AMCs, but an AMC which can manage, say, for example, the assets in the power sector. Right. It requires a specialized setup to manage these assets. If it was decided that these assets, we don't want that they be referred to NCLT and there can be a resolution even outside the NCLT framework, because many of these assets, there are PPAs available, even there is a fuel supply agreement, but still they are not operating at the full capacity. Right. So in such a situation, if banks decide that these assets definitely need to be taken out of the bank's books, and we need a very strong agency who can manage these assets.
Is my understanding correct from what I hear from you that the priority at this point is to address the assets in the power space, and so this ARC or AMC, as and when it is taken forward, will address these assets to start with?
Maybe that would be the good beginning point, but the idea ultimately would be that we have the capability to manage the stressed assets. Currently, the ARC structure which is existent in the country, I am finding that that structure is missing. So the requirement is not as much for an ARC maybe, but there is definitely a requirement in the country for having an AMC.
If government plays facilitator, what about funding? How much will banks have to contribute to this AMC?
So that is what will be decided. And again, here also,
some sort of idea
so
of
no, there is that one is that whatever is done, so there will be definitely an arm's length between this AMC or the fund and the banks. And the risk appetite of all banks is different. Today, currently, what is the difficulty? The difficulty is that if there is a stressed asset and there are 26 banks dealing it, even building a consensus around that itself is difficult. So if that consolidation can happen through this route, then the decision making itself will be much faster, and the responsibility for running the asset will shift.
Where do things stand as far as the power sector is concerned? The Samadhan plan, what is the current status?
So there are several elements to Samadhan, which is a plan which was thought of by the State Bank of India, and there are various steps. So they all are in progress, including determining the sustainable debt, technical evaluation of all the plants by NTPC. So all that work should be done within this month.
Okay.
That is what we are expecting. There are not many plants. We have identified only 11, and out of which 9 seems to be the prime candidate for this resolution plan.
Okay.
And but in any case, because Secretary DFS, he has been entrusted this task by the Allahabad High Court. So he will do his process, and I am sure that he will be convening the meeting in next couple of days, where again views of all these stakeholders, including the independent power producers who have gone to the court, the secured creditors, lenders, the DISCOMs. So I think he will be consulting widely all these people, and he will be able to finalize his recommendations and give it to the Allahabad High Court.
How confident do you feel, given the current context, both in terms of power demand, which is picking up, as well as the supply constraints that we're faced with both on coal as well as the gas side, that things are going to improve? These
plants, the lenders believe that because they have PPAs, and if they go to NCLT, there is potentially the economic loss will be much higher.
In principle, do you believe, and I'm not suggesting that the idea is to merge weak banks with weak banks, but the industry as a whole finds itself in a difficult position. So given that context, is consolidation the best way forward? Again, it's not been decided. Will it be geographical consolidation that we're likely to see, region-specific consolidation we're likely to see? I mean, what to your mind should be the way of looking at this? Whether this happens now, 6 months down the line, a year down the line, we don't know. But what should be the way of looking at this?
So the one way to look at it is that do we need 21 public sector banks? So that is the first question. So there seems to be some sort of unanimously bankers feel that maybe 21 are too many.
Okay.
Another is that...
What is the right number?
No, there is no right number. So there is no right or wrong number, but 21 is too many.
Okay.
So that much is
that's the
consensus.
Okay.
Right? What is the right number? That is something will need to be decided.
Sure.
But running a bank in today's environment, where the requirement of compliance, regulation,
capital,
technology, capital, and the owner is same, and the capital is not unlimited, and that capital gets fragmented. So is this the best optimal way of using a resource which is scarce? Technology, it requires a lot of investment. Sure. Is it possible for smaller banks to not have technology and compete in this market? Or if they want to have technology, do have the resources, management bandwidth to compete with likes of what is emerging today? The banks are becoming less of banks and more of technology companies. So these are some of the broader issues. When we look at it, then the path which comes out is that there is a need for some consolidation for sure.
All right, interesting conversation that. We'll get you chunks of that all through today's trading session. But with that, we'll slip into a short break, come back. We talk about the Reserve Bank of India releasing. Welcome back. You're watching Power Breakfast on CNBC TV18. Just keep an eye out on the Asian markets. We're getting early rates come by from Hang Seng as well as Shanghai. Shanghai is absolutely flat, still hovering around the 2-year lows that it was trading at in yesterday's session. But the Hang Seng, that one's opened with a gain of 100 points. That's taken higher as well. The Asian markets gradually are moving higher as we speak. The Nikkei up 0.6%. Korean markets, remember when we started the show, were sitting with a cut of about 0.5%, and now that has come off to about just 0.1%. Similar moves seen on the Taiwanese indices as well, Taiwanese index as well. The Straits, however, was in the green earlier, has moved into the red. What is good for our markets is the SGX Nifty. Earlier indicated a cut of almost about 20 points at the start, but now that I believe has moved into the green. There you have it, the SGX Nifty indicating a mild green tick at the open. So we will keep an eye out on this. The Asian markets doing fairly well, in fact recovering as we speak. But the Reserve Bank of India released the minutes of Monetary Policy Committee meeting, which was held on June 6th. Remember, the RBI hiked repo rates in this meeting, citing risks to inflation. Ritu Singh, our colleague who went through the release, joins us now with more details. Ritu?
For a change, this time around, all 6 members of the Monetary Policy Committee voted in favor of a 25 basis point rate hike while maintaining their stance as neutral. So there are various reasons that are listed out in the minutes that has now been revealed. The important point to note is that there's no difference in the tone that these members have adopted in the MPC statement itself and the minutes. So there's pretty much a unanimity, starting with Urjit Patel, who says there is a risk to the baseline inflation, whether it is from oil prices, global financial market uncertainty, rise in household inflation expectations, the MSP formula, but of course a normal monsoon could prove a relief for the inflation from here. He also adds that domestic growth has strengthened and investment activity has accelerated. Veera Lacharya, again somebody who has been hawkish for a while, also says the key uncertainty at this point of time is the oil prices. He goes on to say that upward pressures on food prices through generous MSP responses could worsen the headline inflation number. He also says that trade wars and the surrounding uncertainty regarding oil prices as well as the food prices has kept him to maintain his stance at neutral. Michael Patra says that the prolonged period of no action or a status quo from Reserve Bank of India was hurting its credibility when the market rates were already moving ahead and inflation was far above its medium-term target of 4%. He goes on to say that all early warning indicators when it comes to risks to inflation were flashing either red or amber, and therefore it was time for the RBI to act, which is why he voted in favor of a hike. The other 3 members, Chetan Ghate, also said if RBI is to achieve the 4% medium inflation target, it requires constant vigilance, and successful resolution of cases under IBC would further assist capacity utilization. Pami Dua says the risks to inflation come from crude oil prices, HRA revisions, MSP formula and the like, and the downside risk is of course from a better than expected monsoon, whereas Ravindra Dholakia says that uncertainties remain on geopolitics with the trade wars, and oil prices are not likely to come off anytime between the next 12 to 18 months. Therefore, that warranted some vigilance on the inflation front, which is why he also voted for a 25 basis point hike.
All right, Ritu, thanks very much for that. Moving on, SEBI board will be meeting today, and Yash is here with details on what is likely on the agenda for this meeting. Yash, morning.
Well, Ekta, as you rightly pointed out, market regulators SEBI's board will be meeting today in Mumbai, and essentially there would be discussions on 3 crucial points. One is, of course, the primary market and the IPO section. The second one is on MII, which is Market Infrastructure Institution, and the third one would be on the buyback front. Now, starting with the first one on the IPO, we are given to understand that significant relaxation could be given on this particular front to continue the momentum which we saw in the IPO market in 2017, and towards that particular thing, we are given to understand that the board might mull reducing the time period for the announcement of the price band of the IPO to 2 days prior to the issue opening from the current 5-day period. It may also reduce the period for financial disclosure for any company which it tends to bring out its public offer to essentially 3 years from the current 5 years. Also, we are given to understand that SEBI might appoint a monitoring agency when it comes to, really assessing where the funds are being utilized, so on and so forth. for every particular IPO. Right now, this monitoring agency is only for IPOs which have a value of more than 100 crore. On MII, we are given to understand that there could be a significant overhaul where we could see a harmonization in terms of foreign entities holding in market infrastructure institutions like exchanges, depositories, as well as clearing corporations. There, we could have a uniformity in terms of shareholding from foreign entities.
All right, Yash, thanks a lot for that. We will watch out for the SEBI board meet and trust you to tell us the key takeaways post that as well. With that, Arvind Subramanian, our Chief Economic Advisor, has resigned as the CEA to the Finance Minister. At a press conference yesterday, Arvind Subramanian said that his stint at the Finance Ministry was the best job, I quote, he ever had, and that it has been, again I quote, exciting and fulfilling. He also spoke about the key policies, ideas and challenges during his tenure. Here are some highlights from his interaction with the media.
Being associated with the GST, especially the run-up to the Constitution Amendment Bill, I mean, the economic surveys have, have been so gratifying in terms of, just trying to elevate the quality of analysis that we do. Diagnosing early the twin balance sheet challenge, the public investment strategy, and also, JAM, universal basic income, bad banks, stigmatized capitalism, carbon imperialism. I hope, I have to stop because otherwise it starts sounding like, I did much more than I actually did. Take something like universal basic income, for example, right? I mean, the fact that it didn't happen in the last 1 year is not by any means, I've not given up on the idea, for example. And if I would go further and say that, in fact, something like what Telangana is doing is kind of like a universal basic income. So the more important thing is that it's become part of the policy debate, policy discussion. There's many other ideas, bad bank, whatever, all these ideas, carbon imperialism, whatever. And as long as they remain part of the, the policy discussion over the next few years, some of them will be implemented, some of them may never, some of them may be implemented with some delay. I think that for every job, you should get the best person possible. That should be the criterion. Who's the best person for the job? I'm not saying I was. Maybe you should learn from the mistakes that maybe they made in choosing me. But I think it should be just competence. I think that's what the government believes in. That's what it should follow. Provenance, origin should be completely, what loyalty, whatever should all be second order. It's about merit and competence above all.
Okay, so that is Arvind Subramanian. We need to take a break now, but up next we'll get you an excerpt of a chat with Sanjay Nair, the CEO of KKR,